Top 10 financial terms every beginner should know. Hey there, financial explorers. Ever felt overwhelmed by financial jargon? Wonder what terms like loan, interest, or net worth really mean? You're not alone. Today we're diving into the top 10 financial terms every beginner should know. Stick around till the end because we've got a special bonus term that could change the way you manage your money. And if you find this video helpful, don't forget to hit that subscribe button. Let's unravel these terms together and make finance easy for you. Number 10. Expenses. Now let's dive into expenses. These are the outflows, the costs of living your life or running your business. From rent or mortgage payments to the coffee you grabbed this morning, they all count as expenses. For businesses, expenses can range from employee salaries to office supplies. In 2021, the average American household spent around $61,334 annually. Managing these expenses is key to financial stability. By tracking them, you can identify areas where you might overspend. Plus, for businesses, some expenses can be tax-deductible, which can help lower the tax bill. Number 9. Income. Moving on to income. This is your financial fuel, the money coming in. It's not just about your salary. It includes earnings from side hustles, sales, investments, or any other source. In 2020, the median household income in the U.S. was about $68,700. But income isn't just about the gross total. There's revenue, which is your total income from all sources, and then there's net income, which is what you have left after expenses. This could include taxes, rent, groceries, all the costs of living and working. Understanding your income is crucial because it sets the stage for budgeting and saving. Knowing what you earn helps you plan for what you can spend, save, or invest. Number 8. Net worth. Next, let's talk net worth. It's like a financial snapshot, what you own minus what you owe. Calculating your net worth gives you a clear picture of your financial standing. Surprisingly, in 2021, the median net worth of American households was around $121,700. But this number can vary greatly from person to person. To find out your net worth, start by adding up all your assets, your bank balances, property, investments, and even that vintage car in your garage. Then, subtract all your liabilities, loans, credit card debts, mortgages. The result is your net worth. It's a vital number because it tells you whether you're financially healthy or if you need to make some changes. Think of it as your financial pulse. Checking it regularly helps you keep track of your financial fitness. Number 7. Liability. Let's tackle liability. It's basically what you owe, the flip side of assets. Whether it's a student loan, a credit card bill, or a mortgage, these are all liabilities. As of 2021, the average American had about $92,727 in debt. Liabilities come in two flavors, short-term and long-term. Short-term liabilities are like the upcoming bills you need to pay soon, within a year. Long-term liabilities are more like a marathon. They take longer to pay off. Think of your home mortgage or student loans. It's essential to manage these well because too much liability can lead to financial stress. But not all liabilities are bad. Taking on a mortgage can be a step towards owning a home, a valuable asset. Number 6. Asset. Let's dive into assets. These are the treasures in your financial chest. Assets are anything of value that you own. They can be as straightforward as the cash in your bank or as complex as investments in stocks or real estate. As of 2021, the total household assets in the U.S. reached a staggering $143 trillion. Assets are often categorized into two types, liquid and fixed. Liquid assets are your quick cash converters, like stocks or a savings account, ready to be turned into cash swiftly. Fixed assets, on the other hand, are more like the slow burners. Think houses, cars, or your grandmother's antique necklace. They're valuable but take time to sell. Both types play a crucial role in your financial health. Number 5. FICO Score. Next, let's talk about the FICO Score. This number, ranging from 300 to 850, is like your financial report card. A high score signals to lenders that you're a star borrower. But how do you get a high score? It's all about your credit history. Paying your bills on time can have a huge impact. In fact, payment history makes up 35% of your FICO score. The length of your credit history is also important, accounting for 15%. The longer your history of responsible credit use, the better. And it's not just about how much you owe, it's about how much of your available credit you're using. This is called credit utilization, and it matters a lot. Keeping your spending low compared to your credit limits can help boost your score. Number 4. Credit. All right, let's demystify credit. It's essentially a trust system where you borrow money now and promise to pay it back later. Think of it like a financial handshake agreement. Did you know as of 2021, there were over 1 billion credit cards in use in the USA alone? That's a lot of trust going around. Credit cards are one of the most common ways to use credit. They're not just for shopping, they also help you build a credit history. That's important because your credit history affects your ability to get loans, mortgages, or even rent an apartment. The key to good credit: paying your bills on time. Late payments can hurt your credit score, making it harder to borrow money in the future. Number 3. Compound interest. Let's unravel the mystery of compound interest. It's a powerful concept in finance, often dubbed as the eighth wonder of the world by Albert Einstein. Here's how it works. You earn interest not just on your initial deposit or loan, but also on the interest that accumulates over time. This snowball effect can significantly increase your savings or investments. For instance, if you start with $1,000 in a savings account earning 5% compound interest annually, after 10 years, you won't have just $1,500, but about $1,629. It's a game changer for long-term financial growth. However, the same principle applies to loans. If you're not careful, compound interest can make your debts grow larger much faster. Number 2. Interest. Now, let's talk about interest. Think of it as the cost of borrowing money. It's how lenders make a profit and cover the risks of lending. The average interest rate on personal loans can vary widely. In 2020, it ranged from about 6% to 36%, depending on your creditworthiness and other factors. But interest isn't just a one-way street. It can work in your favor when you're the saver or investor. In a savings account, for example, banks pay you interest on your deposits. It's like getting a small thank you for keeping your money with them. This rate, however, is usually much lower than what you'd pay on a loan. Number 1. Loan. Let's dive deeper into loans. Think of a loan as a helping hand from a bank or lender, allowing you to access money you don't currently have. Whether it's for buying a house, a car, or even starting a business, loans are a crucial part of financial growth for many. As of 2021, consumer loans in the US alone exceeded $1.5 trillion. That's a lot of borrowed money. But remember, loans aren't just free cash. They come with the responsibility of repayment, usually with added interest. Your credit score, which ranges from 300 to 850, plays a big role in this. The better your score, the more likely you'll get favorable loan terms. Sometimes, lenders need more security. Bonus. Budget. Finally, our bonus round, budget. Think of a budget as your financial roadmap. It guides you in allocating your money effectively. Surprisingly, a 2019 survey found that only 30% of Americans have a long-term financial plan that includes savings and investment goals. A budget helps you match your spending with your income, ensuring you don't overspend. It's about planning, foreseeing upcoming expenses, and preparing for them. Budgeting allows you to prioritize. Maybe you decide to save for a vacation or invest in a retirement plan. It also helps in managing debts and saving for future goals. With a budget, you take control of your finances rather than letting your finances control you. And there you have it, the top 10 financial terms demystified, plus a bonus to help you plan better. Subscribe with us and learn. If you find the information in this video valuable, please subscribe to watch more videos like this and also share it with family and friends. Write "I subscribed" in the comment section below and let us know of topics that interest you in the subject of finance. Please hit the like button and the notification bell to be notified. There's more waiting to be learned in our next video. Our aim is to provide you with high-quality educational content and information to help you learn and hopefully be financially free one day. The contents of this video are for educational and informational purposes only. Thanks for watching.